why Snap is up, how much is already priced in, and what it's all meant for Netflix and some of the other competitors in the overall social media space. We're going to highlight in the best of Bloomberg Intelligence. Here for more, Bloomberg's Mandeep Singh. Talk to us about the fact that Snap's rallying on this news. It didn't after hours yesterday, but is this because everyone's like, oh, well, finally, it's all coming clear?
Well, they also told us that in August, they had mid-teens growth, whereas July was flat. So clearly, July was an inflection in terms of the top-line deceleration we saw. And look, for a company like Snapchat, which is trading at, 4 times sales, Meta, when you compare it to Meta, Meta is like 25 times Snap's market cap. It used to be 6 to 7 times. And I would bet, a company like Snapchat with 315 million DAUs will be a growth assets once we have a rebound in terms of, the ad spending. So I feel a lot of the slowdown in expectations is priced in. You're not going to see more estimate cuts. And that is what the market is reacting to here.
The workforce reduction here, how much do they need to really slim down margins or really improve margins here by cutting costs? And why is talent the first to go?
Well, so I think they're divesting from everything that's non-core at this point of time. So they made a big bet on hardware. Well, we know Meta is spending $10 billion on building the metaverse. Snapchat was trying to do something similar. And now it's about, OK, let's focus on the cost. Let's get our act together. We will not grow 50%, but we'll still grow 20%. And with this recent cut, I think they can show positive free cash flow. And that's why the market likes the news overall.
Talk to us about the competitors. And at the same time that Meta was the best performing stock on the S&P today, we do see that people are really being very down on the whole pivot to the metaverse. What are we thinking about these companies in general, and when advertising comes back, who's ending up being the winner?
Well, so it will still be a triopoly with Amazon being the third one, and then Google and Meta. But you will have a longer tail of advertisers this time around because the marketplaces like DoorDash, Uber, they're getting into advertising. Every other company is trying to kind of get their foot in the door when it comes to digital ads. Apple could be the wild card. In fact, a lot of people are betting, even though they were the advocates when it comes to privacy, it was really a big push for them to get into ads, which is really in their ecosystem. And so you could have more than 3 players going forward once we come out of this advertising recession.
Well, to double down on that point there, you see a lot of the love going to Meta in the stock market today as the kind of counterbalance here. But do you think that the stock market is overly anticipating what a benefit it is to Meta when there are other players here that will benefit?
It is, but remember, Meta is the biggest player when it comes to direct response ads, and direct response ads still have a higher ROI in terms of customer conversion than your traditional, brand ads that you see on TV. So the digital ad environment is still a kind of a secular growth market. Yes, you will have these cyclical downturns, but net, you're going to find, these companies growing 12 to 15% because it's a secular trend.